Nice session here. Mike, what are you watching into the close, into Powell, into the end of a week where the S&P is up 1.5% so far?
Yeah, bounced back a little bit. Today's been sort of listless. I mean, volume, I don't know where we are now. I haven't seen it in the last 5 minutes, but we were running 40% below normal volume. And I think everybody's on hold waiting to see what Powell says tomorrow. You know, we're stuck in a trading range, low of 28.22, high, call it 29.38. We're going to eventually break out. And obviously, the Powell tomorrow could break this market out to the upside, although I really doubt he does. That moves us next to focus on trade, the trade talks that come in September, and probably we're still stuck with trade not moving positively anytime soon. So I think this market's still stuck in this range, and I wouldn't be surprised if we don't go down and undercut that 28.22 level before it's all said and done as this plays out in the coming weeks.
So much has been dictated by the bond market. If you look at the sector performance today, it's kind of a mix. You've got financials on top, but then staples and real estate also doing well. Usually, you kind of see them on the opposite ends of the rate play. What is the sector performance and the rate moves telling you about stocks?
Yeah, today was one of those days, I think you throw it out the window when trying to determine what are the sectors telling us, because it made absolutely no sense. You know, the banks have been extremely correlated to the yield curve spread, and we didn't really see any meaningful steepening today, but the banks index was up over 1%. Makes no sense. Bond yields were up, but utilities actually did okay. You know, staples did okay. Was it bond? You know, they should be weak in a rising bond environment. Yeah, we've got some weaker economic data, some money, maybe money went there, but I think you had a market, the low volume. I think the fact the Fed is going to be talking tomorrow, I think it was just one of those sessions that you don't try to read too much in what we saw today. I think you wait, see what message he delivers, which I don't really think that he dials back the less dovish tone than the market wanted to hear. I think he probably stays pretty much where they were, because if you read the Fed minutes yesterday, there's a reason for them not to change their tone yet. So I think the market comes away with, maybe not disappointment, but not excitement either. And then it starts to move on and starts thinking about trade. And that'll dictate how this market trades in the coming weeks.
All right, Mike Gibbs, thank you.